An order block is the most powerful concept of institutional reference points. It is one of them. There are 7 institutional reference points in total. Number 1 is order block, number 2 is mitigation block, 3 breaker block, 4 fourth liquidity void, fifth one is fair value gap, sixth is rejection block, and seventh is the old highs and old lows. These 7 institutional reference points are critically important because all the institutes, big boys, central banks place their trades on the basis of these reference points. Let's start with the definition of order block. Simply put, order blocks are an area in trading where governments and big institutions would pile up their orders to enter in the market or exit their existing positions. What thing is telling us, we are the retail traders, right? Limited money. We trade in lot size, whatever it is, and mostly the brokerage firms offer us up to the 100 standard lots in a single trade. But the central banks, institutions, commercial banks, they do not trade like this. They trade in blocks. They pile up the orders or money all together at one place, and trade it in this market. A rule of thumb for the order block to be valid, the price must not close below the middle of the order block range. I'll show you this thing on the chart. It's difficult to tell you in the definition. Let's see here. The next slide is, there must be a break of structure. Order block should break the structure. There are three conditions basically for an order block to be valid. Otherwise, it is invalid or a trap by the institutions. You should be aware of it. You should take care of it. It should break out the structure, right? As you can see in this short illustration, there is a break of structure spotted here. This is an impulse move to the upside, showing there is a order block. Correct? Because a large quantity of orders are placed here, and they are not letting the price to move down, to get further down. So they rejected the price and moved to the upside. The order block should not be mitigated. It should not be weakened. There are actually 2 types of order blocks. Number 1 is bullish and other one is bearish. The last sell candle before an impulse move to the upside, printing a bullish candle. The last bearish candle would be considered as an order block. And similarly, the last bearish candle before the price break out the structure, give an impulse move, and gets down, starts moving down, would be considered as a bearish order block. Correct? Let me show you in this exhibit. Bullish order block, you can see range, consolidation, an impulse move to the upside, At this point, price must have printed a bearish candle before a strong bullish candle. This one, breaking out the structure. Similarly, in the bearish order block, you can see at this point, price has printed a last bullish candle before this move to the downside. Note it? I'll show you these things on the chart. Let you understand it in a better way, in a manner. This is a Nasdaq chart. I have marked some areas for you to understand it. Keep in your mind the exhibits of order block. First of all, let's find the order block. We said that studied that the order block last bearish candle before an impulse move to the upside is a bullish order block, and a last bullish candle before an impulse move to the downside would be a bearish order block. And there were the three conditions which were equally important for these two types of order blocks. Price should it should break out the structure. Yeah, definitely it's breaking out the structure. An impulse move should be observed. Yeah, we can see an impulse move to the upside, and it shouldn't be mitigated. It shouldn't yet be mitigated. This block is not yet to be mitigated. Similarly, you can spot this too. See this. See this block. Right? An impulse move to the upside, breaking out the structure, not mitigated yet, retested, reconfirmed. Price is not closed 50% of the order block, because a bullish and bearish candle together forming a wick like this on a lower time frame, if you will see it, or on a higher time frame. Correct? So this is a valid order block. Where we should enter, where we should play it, when we should place, we should wait for the price to come back this order block, and observe the reaction, how price behaves at a certain point, and giving us some opportunity to enter or not. Correct? I am speaking a little bit slow because you got my each word and understand it in a better way. It's a very good example. See this. Bullish order block formed. Price retested here. When price closed this candle, this bullish candle, and because this candle was not closed inside the block, it is out of the block here, then you can easily enter your position and see this, the move to the upside. You can enter buys. Let's find another example for the sell order block, bearish order block. See this. Yeah, one thing critically important. Price. This order block is not yet mitigated as the price didn't close above to it. This is the trap. This is the, in simply words, as sell hunt, but actually it is a liquidity grab. Many traders had put your stop loss just above this candle, price moved up, institution moved the price to the upside, picked the liquidity, liquidated all the orders, and started moving down. This is basically the thing I wanted to show you and tries to tell you in my live streams that they play with the psyche of retail traders. They know exactly what is happening in the mind of retail trader and how retail trader is trading. Correct? Yeah. When we can enter, we should enter at a retest of this order block, or price should create a fair value gap. I'll explain in another way, in another video, what is the fair value gap is and how to trade the fair value gap. Fair value gap is equally important as the order block. Here, price created in fair value gap, and in this fair and this fair value gap, bullish candle closed. The next candle started moving down. So this is an indication that you can enter sell from here. Put your SL at this point. Liquidity already has been grabbed. Now there are very less chances the price will come back again very soon or in the coming time. You are if you are scalping or intraday scalping, price is not gonna come back again at this point very soon. Here should be your entry. SL stop loss should be there, and you should take sells. See this, still selling here. If you see, price again tested this block, this thing, moved back, printed here a bullish order block, accumulated and started to change its direction. Correct? Got it? So we have done. Now here we can find another order block for a buy side entry. This sell is completed, even a swing or a scalping, intraday scalping. This is an order block, not mitigated, breaking out the structure, moved up. At the close of this candle, you can see that there is a fair value gap. Price didn't even reach to the fair value gap, representing this that price tends to move up very strongly. Price don't want to get back. That's why this block hasn't been tested yet. And if you'll see, you can see, let me drag it. When this block is tested, not yet, means you can have buys from this point and let the position run. It's up to you. You're securing 80%, 20%, 90%, whatever. The way you manage your trade, but it has generated a good profit for a retail trader. If the retail traders know what the order block is, how to trade it. I'm not gonna make this video long, and because these days people do not like traders, or other people do not like to watch long videos. But my purpose is to convey you the true knowledge, the real trading system. That's why I spoke a little bit slow, and yeah, this thing needs a lot of time to explain, but due to the shortage of time for the video, I can't do. But I have conveyed you the gist of the topic. I'm sure you have got my point, and even if you have any question regarding this, you can ask in the comments or in the Telegram channel. The link is given in the description. You must join that for the good knowledge, for the trade entries, discussion, whatever. You can contact to me, and live stream is also there, where I do the explaining, where I explain these type of things live on the charts and place the trades. So dear, I would at the last I would request all of you, please understand the real trading system, the true trading system, so that you shouldn't lose your hard-earned money. You should earn something from this market. It's the biggest market in the world. And if you get some profit from after watching my video, you get some knowledge, and do the same thing live, earn some money, my objective is done. Thank you so much for watching this video. Thank you.